Do you ever feel like the stock market is super overwhelming? Like a bunch of confusing jargons and endless charts all jumbled together? You are not alone! I too used to spend countless nights researching and poring over charts, yet felt completely lost. Every decision felt like a gamble, and frankly, I was tired of rolling the dice with my hard-earned money. But guess what? I've cracked the code! In this video, I will review the top 5 ETFs I discovered that transformed my investment journey and could do the same for you. And trust me, the last one might just change your life. Investing can feel intimidating at times, but what if owning a slice of the American dream was simple and profitable? Well, you might want to consider the Vanguard S&P 500 ETF, ticker VOO. Think of it like getting a piece of the top 500 US companies, from your morning Starbucks to your evening Netflix marathon. Even investing legend Warren Buffett is a fan. And who are we to argue with the Oracle of Omaha? In his 2013 letter to shareholders, he recommended a low-cost S&P 500 index fund for his family's inheritance, saying, "I suggest Vanguard's." Why? Because VOO has a lower expense ratio of just 0.03% and offers diversification across multiple sectors. The top 3 sectors being information technology at 29.6%, financials at 13.1%, and healthcare at 12.4%. Furthermore, over the past 10 years, VOO has delivered an impressive 12.9% annualized return. A $10,000 investment 10 years ago would have grown to a sweet $34,000 today. VOO is truly a gift that keeps on giving. Up next, the Nasdaq-100 ETF, ticker QQQ. This ETF unlocks the hottest names in tech like Apple, Amazon, and Microsoft, all under one roof, driving innovation and disrupting industries. If you believe in the power of tech to shape the future, QQQ could be your golden ticket to riches. While less diversified than VOO, QQQ offers a high growth potential with a focus on the technological sector at 58.9%, consumer goods at 17.9%, and healthcare at 6.3%. And the performance? 18.6% annualized return over the past decade. That's turning $10,000 into $55,000 today. But remember, excitement comes with a little turbulence, so hold on tight. But for those who dare to dream big, QQQ could be your gateway to innovation and massive returns. However, if QQQ still doesn't quite satisfy your needs for thrills, then buckle up for the Vanguard Information Technology ETF, ticker VGT. VGT is like a tech roller coaster fueled by Red Bull and 5 espressos combined. This ETF zeroes in on the most cutting-edge, ambitious technological stocks, the ones that could make you a fortune or leave you scratching your head at your investments. But hey, high risk, high return, right? VGT's main area of focus are semiconductor at 27.2%, system software at 23.9%, and technology, hardware, storage, and peripherals at 17.4%. And guess what? Over the past 10 years, this ETF has delivered a heart-pounding 20.4% annualized return. That's turning $10,000 into a whopping $64,000. It's really a wild ride worth taking. But hey, even the most ambitious investors need a break from the market's frenzy. And that's where Schwab US Dividend Equity ETF, ticker SCHD, enters the scene as the champion of dividends. No more crazy rides! SCHD focuses on the companies with a history of paying steady dividends, like Coca-Cola, Home Depot, and Pfizer. So you can potentially earn cash just from owning it. Imagine a money tree that sprouts cash instead of leaves. SCHD also offers a diversified buffet of dividend powerhouses, with heavyweights in financials at 17.4%, healthcare at 15.7%, and consumer staples at 13.9%. Over the past decade, this ETF has delivered a smooth 11.6% annualized return, proving that sometimes the calmest water can offer rich rewards too. a $10,000 investment would have blossomed to a cool $30,000 today. Now, let's chase some serious alpha. Not with S&P 500 or tech ETFs, but with something way bolder. Introducing Direxion Daily 20+ Year Treasury Bull 3x Shares ETF, ticker TMF. It aims for massive gains that can potentially generate over 500% over the next few years. Yes, you heard it right, 500%! But how is that possible? Well, TMF tracks the US Treasury 20+ Year Bond Index, but with a turbo boost. It invests 70% on iShares 20+ Year Treasury Bond ETF and the remaining on financial tools like swaps to magnify its gains and losses by 3 times. This ETF is definitely not for the faint of heart. But before we dive into the potential golden opportunity in TMF, let's equip ourselves with some key knowledge about interest rates and their influence on bond prices to further understand this strategy. Treasury bonds serve as a cornerstone for financial stability, representing fixed-rate government-issued debt securities. Picture them as Uncle Sam's stamped IOUs, ensuring you a fixed interest rate over 20 or 30 years in return for lending him money. Let's explore the 2 scenarios for clarity. In scenario A, existing bonds offer a steady 3% annual yield. However, as the Fed hike rates, newer issues will inevitably offer bolder returns, turning heads with their higher yields. This shift in the landscape leaves existing bonds less attractive, causing their price to drop. Conversely, in scenario B, when the Fed eases on the brakes and newer bonds offer little incentives for investment, existing bonds with their generous 3% yield suddenly shines brighter in comparison, driving up their price. In a nutshell, bond prices have an inverse relationship with interest rates. Applying this concept to the real world, remember year 2022 when the US interest rate started skyrocketing? TMF plummeted over 75%. Ouch! But hold on, the tides are turning. This year whispers the promise of rate cuts by the end of 2024. Remember your earlier lessons? Falling rates are like sunshine for bond prices. It sends them soaring. And here's where TMF becomes a financial firework. TMF being a triple boosted rocket, you'll be ready to amplify the gains from those plunging rates by 3 times. And if history repeats, TMF could become a moon mission, potentially delivering an explosive 500% return over the next few years. That's enough to turn even the most cautious investor into a thrill-seeking space tourist. Of course, TMF isn't for the faint of heart. It's a high-risk, high-return thrill ride. But if the stars align, TMF might become your financial superhero, skyrocketing your portfolio to new heights. So, there you have it, the top 5 ETFs with serious potential to supercharge your portfolio in 2024. Remember, the best choices for you will depend on your individual risk tolerance, goals, and investment horizon. Consider combining these ETFs to build a diverse and dynamic portfolio that aligns with your financial roadmap. So, let me know in the comments which ETF resonated most with you, and what other financial topics you would like to see. Don't forget to smash the like button and subscribe for more insightful content to help you reach your financial goals. Thanks for watching and see you in the next video.